I'm on the way driving to work, and I was just listening to the news, and there is speculation that the Australian Treasury is looking at limiting negative gearing to about 2 investment properties per taxpayer. And they are also looking at removing the 50% CGT exemption. And the reason that they have propounded for doing that is that they believe this is going to cool the housing market and reduce prices, and in the medium to long term make housing reasonably affordable for the vast majority of Australians. Now, sometimes you really ask yourself, what kinds of people, economies do we actually have ruling this nation? Because this is the most ridiculous argument that you can actually put forward. You could not be more stupider than make such an argument. And I will tell you why. I think the opposition party is right to some extent, because they have been postulating that if you tax something more, then you get less of it. Now, let me tell you the logic of that argument. It's been proven time and time in Australia that what normally happens is that whenever there's a bad news, so I look at maybe what they're trying to do as the bad news for the property market, right? So whenever there is a bad news that has the potential to affect the returns or participants in the property market, now 2 things will happen. The buyers will pull out of the market, because if you're not getting the tax shield, then you might not want to invest. Now, when the buyers pull out of the market, then the builders automatically also have to pull out of the market as a consequence of that. So buyers pulled out causes builders to actually pull out of the market. And when that happens, you have an issue with supply. And we already have an issue with supply. If you remember, sometime after the GFC, what happened during the GFC is that there was so much negative news in the marketplace that no one was actually buying anything. And because no one was buying anything, the builders were not building anything, right? And therefore we had rental crisis. People practically have to line up for hours at a time just to go and inspect a rental property, right? That's what happened in the GFC. Now, what I suspect is going to happen if they proceed with this stupidity that they are talking about is that the buyers will pull out of the market, investors will pull out, and when investors pull out, then there will be no one you can sell to, right? So the quantum of active buyers in the market will be significantly reduced to some extent. And when that happens, the builders will also pull out of the market. And we all know the Australian government is never going to come in and fill in the gap. And so the confluence of buyers pulling out of the market and the sellers also pulling out of the market is that house prices will have to increase. Now, so house prices will have to increase. Now, let's get to the bottom of this issue. What is the problem with the Australian housing market? Why is it that housing prices in Australia are always on the increase, and it's just very difficult, it's extremely difficult to cool the market down? What is the reason for that? I put forward the argument that the primary reason for the escalation of housing prices in Australia has more to do with the fundamental structure of our economic system than it has to do with our tax policy. And I'll tell you why. You see, the way the economic or the financial system is designed is that the more a bank lends, the more profit it makes. The more the bank lends, the more demand there is for houses. And the more demand there is for houses, the more the prices increase. The more the prices increase, the more profit people make. And the more profit they have in their houses, the more equities they have accumulated in those houses that they can use to buy second, third, and fourth houses. Right? You see this dynamo? You see this chain, this chain reaction? If you are a bank, you lend money to Mr. A. You lend money to Mr. A. Mr. A makes profit, or his capital base increases because of that lending. When his capital base increases, he is in a position to come back and access the equity in that house to buy second, third, and fourth houses. Yeah, and this continues as a chain. So this is called the issue of housing equity withdrawals. It is the confluence of two things. The confluence of two things, right? The first thing is that you can withdraw equity from your house without selling it. Yeah, that's one thing. You can withdraw equity from your house without selling it. That is, if one house has gone up in value by say 500,000, and there's another house for sale for 500,000, you don't necessarily have to sell property A to buy B for 500,000. You simply contact the bank to give you money against property A, so you can actually buy B. Right? That's one thing. But the second thing is to do with the fundamental structure of the economic system itself. Banks make money by selling money. Yeah, they make money not by transacting in the real economy. You know, by transacting in the real. That's not what they're doing. They are making money by putting a price on money, which is the interest rate. Yeah, so because you have a price on the interest, you have a price on money, the more you lend, the more profit you make on that lending transaction as a bank to buy houses. And the more profit you make on that transaction to buy houses, the more the demand for those houses increase. And the more the demand for those houses increase, the more equity people have in those houses. The more equity they have in those houses, the more equity they can withdraw to buy second and third houses. And the more they are buying, the more sellers you're going to have in the market. The more developers you're going to have in the market to actually meet that demand. That is the core fundamental problem. Now you tell me, how can you fix that problem by eradicating negative gearing or getting rid of the 50% CGT discount? How do you do that? What kind of logic do you have? You see the problem? So my view is, if you really want to cool housing prices down, then you go back to 1920, 1921, when we didn't have an interest-based economic system. But as long as the core structure of this economic system is that banks are profiting by selling cash, you cannot solve this problem. You cannot solve this problem. You might be able to cool the problem down a little bit by eliminating housing equity withdrawals, to say, well, if your house increases in value, then the only way you can access that equity to actually buy another house is to sell the first one. You might be able to cool the house to cool houses down to some extent by doing that, but not entirely in itself. The core of the problem is banks are making a profit by selling cash. As long as you do not solve that problem, you cannot cool the housing prices down. Think about this and let me know what you think.